Well, good afternoon, folks. Hey, it's Shooter Scott Henderson, and we're going to go over a couple things. Of course, at the end of the presentation, please review our disclosures. Now, this is a culmination of my town hall meeting this morning. My update I did at 2 p.m. and then what I see this evening after I've gone back over everything and I have a fresh mind after my nap. So let's jump right into it. So starting off with the NASDAQ, we have not taken out my internal trend support channel, what I refer to as my confirming low. This basically, the concept is based on where there is a divergence in the low, which indicates that we're having a bottoming form at that leg. All right. So my anchor is 523 and my secondary anchor is 6.5. So I'm just basically aligning that with that wick off. Now, for those of you using TradingView, all you have to do is click on it and click edit alert or save alert, whatever, and boom, save. You have a new alert on your line. And you get a little message thingy up here to the right that tells you, hey, the trend support's broken. I basically live in that world where if it breaks trend support, then I trim 50% of that position, tighten up my trailing stop. Now I'm looking at why I want to stay in the trade. So what I'm looking for here is I do think we get a back test, but right now it's not broken trend support, so we don't. So we just went right up to this supply zone, really wicked right up to the low at that 537.01, 536.78. So I'm expecting a back test, maybe the 618 is the most likely outcome here. I'm not expecting a lot. And the way this structure looks, it doesn't look to me like it's going to break down yet. The distance between this low and this high is nowhere equal to the distance between this low and this high. Okay, it's like 50%. So yeah, we could get a little back test, right? Maybe 50% of the larger channel, which was formed by this low on 4.7, and then our next higher low was on 4.21. So we have this much broader trend support that's confirming as well. Now, when I say confirming versus confirmed, the difference being there is a lower low in price and a lower low in RSI on the entire chart for the time frame you're looking at. That defines a confirmed low. Now, since this is not a lower low in price here, but we are diverging, right? That is considered a confirming low. That's the main difference. So structurally, the way that I see this, I come in and I'm going to draw in my Fibonacci extensions, take the base of the structure because that's what I'm measuring, and I'm going to come in and just say, this is our fib level. So equality is the 100 fib, which is 626 up here, which is a heck of a way from where we are. Now, I don't know that that's going to manifest now, but the larger structure of the mound, you look at the larger structure of the mound and how we continue. This is kind of this noise, but much more euphoric. I mean, buyers just came off the sidelines here, much more aggressive than here or here, all right, which is something I look for. Then we didn't really get a huge degree of exhaustion here, but we gapped down the next morning. Then we had seller exhaustion with that wick off candle. Popped back up, tested the high. So we're still worked in this range for an extended period of time. So this is a pretty solid demand shelf. And we still have this lighter demand shelf over our head at that 491.91. So for us to get bearish at all, that shelf needs to break. And I just don't see that here. All right, so jumping over to the SPY. Again, I'm working with an internal trend channel of roughly the 523 low. And I'm using this wick off at the 6.5 low as well. Now, if we go back and look at the overall trend structure, when we look at where our prior low was on 421, same scenario as NASDAQ, we've got quite a lot of room. We got this tighter demand shelf up here at 576, so that's got to break. That holds. This is an entire flat pattern for a launching pad, and we're potentially heading up towards the 100% fib. So with that in mind, I'm going to jump over and go over our names in swing trade notes for the week. Let's start off with SMPS. Structurally, we've done nothing wrong, still building up this flag. Hasn't really gotten too aggressive one way or the other. We're looking for this breakout off of this fib extension. Roughly, we're looking back for a minimum of the 618 at 533. Ultimate target is up here at 593, 100% fib on this supply zone to the upside. So, this is a beautiful structure. Nice, aggressive W pattern for a consolidation followed by a 5-way down. We've got this is really our lowest low in RSI. So, from a structural standpoint, we're confirming there. This is a divergent low, And then we got a second divergence low that's elongated, so it's extended from the distance of this 422 low and this 99 low. So, equality at that point would have been closer to 218 of 25. And we got this nice little exhaustion extension wick off on this candle, implies we're done. Then we went up and pushed to these highs, test this demand zone again that we've held here for forever. We kind of rejected that, had a risk off moment, got some seller exhaustion, boom, 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 another wick on that. Note the sort of confirming low and then the divergent low that occurred here. So this structurally is what I would be looking for to hold. Now, you could come in and add a more internal trend line, but I don't really think the need for that is. Maybe I go up to 50%. So from a stop standpoint, I'm going to move up and just say, I want to hold it here. I'm going to give it some room, though. I only would put it on 50% of the position size, simply because that is my thought here. It's done nothing wrong here. I mean, it could literally come back and test this low at 437. That's a little heat from 500 from where we are right here, digesting this flag. But I mean, it looks to me like we're going to break out and head towards this 100 is my 2 cents. All right, let's look at WLFC. Done nothing wrong. Similar kind of flag. If we look at the fib extension tool on this, 100% fibs up at 193. Trend support, I've got my alert set, roughly breaks this trend channel. I would be cutting a little bit. We're going off of the corner of this 6.5 low. Again, 6.5 seems to be an anchor for me. Looking for this breakout to get above that 149. First target is at 50% back, which is another leg. Really, the structure is not bullish until we get back above this 159. So structurally, we have a little bit of work here. I don't like these seller candles, but with this kind of a euphoric move and how clean the RSI is, in addition to the wave patterns and how our exhaustion came in, this is like beautiful wick off on a downtrend and an exhaustion. Final leg ends, go back and test the highs, digest this range up here, which is ultimately this 219 through 199. Then we tested the highs, we rejected price again, and we got our downtrend. Fully took this off on the 310 low, whatever was the cost for that. And then we got two more pushes to the downside, more confirming than not. And then we put in our first higher low, and that's we start looking for a new uptrend to start here. So that's my thought on WLFC. Let's take a look at Mongo. It just got toast off of that earning. I don't know why, but it did. I didn't actually have a chance to go look at the numbers yet. Right now, I'm running my trend support. I'm wicking off of this 520 low and my anchor low at 47. It gets below there, I'm going to cut, I'd cut to 50% because I don't have a position on there. Just similarly with this look, I don't know, it's doing something. It's a little more, it's more orderly than this. And whenever I see that, the question marks start popping up in my head. So this may just be one that we cut and run on, but I still like it. We got into the gap, right? We gapped up into the gap, didn't fill the gap. Now we're giving it back. So we're going to see whether or not this ends. And this was just somebody taking profits off of this 197, a $10 move. You'll see some people take profits on that. So, okay, let's look at LTBR. Still digesting this a little bit. I like the structure because of how this held what is the larger trend support. Originally we would have been down here. Could still go down there. I'm not going to say, I never can say it's not. Once we put in this higher low, we should have moved up here, and we're dead on that. So that right now, in my opinion, is our trend channel that we want to honor at this point. Breaks below there, I would change my mind about going long here and then reassess down at 11, etc. That's sort of my thoughts. So right now we're sort of just sitting there, don't have a position on with that. And the main reason I don't have positions into this week that I added from Swing Trade Notes is because the Mag 7 wasn't all green, and I didn't have one name up over 3% when I opened up the week. And then when we opened up Tuesday, and then we opened up this morning, wasn't there either. So at this point, my conditions haven't been met to add. Now, Toast, I like this as well, coming off of our channel here. So now our cycle wave ultimately was pretty tight on this whole leg up. If you were chasing that from the beginning, you would have tightened up into it, of course, tightened up again here, and it would have taken you out roughly about 44 if you followed my thesis. Now, today, we're going to extend this. We're going to go off of our next wick low, We now have a new anchor at 4.7 and a new anchor at 6.4 of 2025. As long as that holds, it's done nothing wrong. However, I tend to believe this is an ABC, and I think that's what we get here. However, I like the look still. That's always the challenge. When I like the look, it's very bullish. Look at what we did here. We came back, hit trend support here, right? Then we took off. What did we just do here? Different, tighter sell. Yeah, but we could still have this and get the rest of this on the breakdown. I don't think so, because I think this was our exhaustion. Just looking at where RSI came in, our deepest push in RSI was right here, right? And then we got another divergent low, back tested the highs. We had a rejected price. We had a nice least minimum actually four peaking drives, which is most of the time I like three peaking drives because it's cleaner. Three peaking drives, 1, 2, 3, all right, so that we know you get that little rolly thingy. And we even got three peaking drives here. We got 1, 2, and then a third one here, as far as that cascading look that occurs. So we just want to maintain, we keep a tight stop here. I like a $40 or $35 cash secured put better here on this, but I like that flag that appears to be building out. That's it's always something that gives me some conviction where we have buyers coming in, and this bold set of volume candles here implies there's a lot of interest here, and I just don't see with the skinniness or slimness of this retrace in comparison to this move as being like all of these buyers gave up. What it tells me is somebody knows something internally and is building a position in the stock because they're expecting it to go up to the 160, 180, around $60. So 100% fibs around 539. I just like the structure when I come down, step out, visualize it that. All right, let's take a look at Rocket Labs. And we did well until we got smoked. And that's the challenge in this market, is you've got to keep your winners winning halfway decent to stay in this game. So we closed just below what would be my confirming trend lows. So you should be at a 50% position size on Rocket Lab at this point. I would suspect that we're going to come back and test probably this volume node here around 25, but it might not be the case. We might be done off of this wick off to the top. Should have taken profits at 32. Just being candid. I just wasn't watching it in detail, and I was running a fairly deep trend support, but hey, it's what it is. Next. All right, looking at JOBY. Now, we've really accelerated. Right now, we didn't close off this week. I'm going to give it more room tomorrow morning. I'm going to pull that back just a little bit structurally. Unless we open red, I'm just going to move it back to the wick here to that 6.925 low, and then use our confirming low at 523. Reason I want to give it some room, because this, even though it's a hammer, right, this just doesn't look done. I think we cascade in volume, squeeze a little more. So I think we get, 1, 2, 3, maybe 4 or 5 days to the upside. And that we wicked above the 61.8. Usually you hold some flow and then get a rollover. It just implies to me that somebody took profits in the market based on market conditions and not necessarily the stock. So on top of that, if you look at the structure of this wave, right, we have one peaking drive. This is peaking drive too, so we should get a third peaking drive. So equality visually for me there in that is we should get up around 100% fib around $11. And currently where my book is for the year, I want a little risk on the table to the upside, simply because I really haven't taken too many losses. I mean, I've had things that really were decay, or my insurance didn't work out, like KRE or some QQQ puts, etc. I really haven't had many names at all blow up. So really, I could risk 5% of my book, 25% of my book, and I really don't have any consequences, because honestly, my P&L and my hit ratio looks really good. So it's like, you don't want to not put the trades on because you can't benefit from the upside. So, that's sort of the gist. All right, let me jump back to some names that we have in our master list. Let's look at SMCI. I've got $40 cash secured puts, done nothing wrong. Where would I put my trend channel? Yeah, of course, my initial channel would be here. However, I'm not. I still have puts on. I added some puts for insulation on this drawdown here, right? It's not closed back above. It gets back above this high, I'll close those. But until then, I'm keeping that on. That's just walking through the process here. Our confirming low, then our first higher low is where our initial mark. Once this next higher low comes in, we're moving our trend channel up, right? Then I'd cascade in this move. Once we had this push, that candle, I'm not going to give them more than 50% of that candle. I'm not, all right? If I was in calls, I'm not. No more run. Okay. Then once we got the gap, I would be up tight right here to the top of that candle. The gap comes in, starts moving there. Once we get this back test, that would be where I put my stop. And I would chase this wick here and get stopped out if I was in calls. But since I did cash secured put, there's no reason for me to mitigate that. The only thing for me to mitigate is whether or not I have risks to the downside, and I might eat $10 or $15 a share or whatever. I want to limit that so I don't have a lot of downside and just let the decay work for me with those puts. All right, let's look at ALS. Absolutely just a bell ringer. Have to go on the shorter time frame, but it just wicked off and gave me the alert. And I dumped at 2015, rolled back in by the end of the day at 2026, and I rolled down from the January calls to the July $25 calls. However, I have nowhere near as big of a position size yet. I'm sort of waiting to see how the market plays out, and hopefully it doesn't gap up. We are confirming it's done nothing wrong. It's just I'm trying to preserve capital and position size, and honestly, I was very deep in time on that trade. I was sort of being euphoric in my thought. When I look at a name like this, I'm like, hey, we have the potential to really get some distance on this. I like the catalyst kind of news. I like what's going on. I went and read the entire article. I posted some comments in chat, by the way, about this company. And the fact that their LiDAR is being embedded into the Nevada inner city. So the cams and everything else that are going in the inner city, this LiDAR is going in there. And that's going to be for autonomous law enforcement, et cetera. But it does not include robots or robo-taxis yet. It doesn't include any of that as far as the chip. We're going to see a migration to that board because the reason Nevada did this was to accelerate the LiDAR adoption. Either it was Musk or someone else that asked them to do this. So, my thesis is still minimum of $44 on this. It's just a matter of how we're going to hold that position, build that position size back up again after taking that gain. But that's my 2 cents on ALS. I expect it to be one of my hits for the year. I wouldn't be surprised if we see a 10x out of this. According to Sentinel, we could see 1,000x of their customer base increase because of the LiDAR being pre-installed on those chip boards, just to give you an idea. All right, let's look at QBTS. We've done nothing wrong. Just going to go over where I would put I'm going to give it a little more room down to this wick, what I would do. Now on this, I have cash secured puts. Actually, I'm selling quite deep. I think I have January $20 calls, so I got paid well for those. Still looking for this breakout 50% back, minimum $20. And I noticed where my strike was. I gave myself the time, obviously I get my 100% fib. I'm going to want to add some kind of calls above $19, but I'm not that as motivated with that. That was the trade that I decided I wanted to do based on the way the chart looked, but I still think it has substantial upside. This is mound one, building out mound two. So, we will get some kind of a back test, which is another reason I figured I would sell those cash secured puts for the premium. All right, let's look at TSI. And we also sold some $20, I might be wrong, they might be $15 cash secured puts, but I sold them. Yes. Right now it's done nothing wrong. We're just building out this, I'm looking at this as drive one. So we're building out. I expect one more candle to the upside on this weekly chart. Where would I have trend support at this point? I would go up to 50% of this candle. And I thought about buying back the puts because they went from like 580 to 130 something this morning until, the total trade at this point. So we've got about a 70% gain there. Haven't closed them yet though. PDYN, looking at where I would bring in. So I would use our 4.7 and our 6.2 low for my trend support. Forgive me, that's actually my wave support. One thing with TradingView is if you're in an instance, it doesn't save the tools you create to different instances. So like, for example, what do I have? Can't tell you the number. I have 20 instances. Each one's a little different. So, all right, Qubits, done absolutely nothing wrong. 25% number here. I'd go to 50% of this candle, right like this. That's where my stop would be. Let it frickin' run. It's just bag at this point. What did we have it at? 13.29. We're up at 19 bucks. Nice move. Okay, let's just go through some more names quickly. Serve has done nothing wrong. I closed my position out on that though. I would use my 6.5 low if I was still holding this, still looking for a breakout. It's done nothing wrong. Alert was at 11.45. Not as euphoric as some other names. Now, LUNR, alert was at 11.33. Just done nothing wrong. I would be using, I'm going to give it a little more room because it's not a big name. It's $11 stock. So roughly 10.50 is what I would use as my stop here on this at this point if I was in it. I did not add that one yet. I might still. I just want to dip in the markets and I'm going to add a lot. I got a lot of names I keep looking at. PPLT, a lot of other things I want to put on, but I'm hesitant because I want the back test. What I've learned is waiting in this market, patience, sitting on your hands, going out and working in the garden, whatever you got to do, right? Not put on a stupid trade. You are much better off waiting for your setup like ours. Wait. Okay, so it would have initially started here on ONDS, raising it up, and it took me out, I believe, on that wick down. So I got right to somewhere around $1.70. I think I had 2 entries on this though, but we're now pushing back up. So I think this is a reload from where we are. I like the way it looks. I like the price on the options as well. They actually paid pretty well. I was surprised. There were like 10,000 open contracts in those $1.50s. So, that worked. HIMS. I still own my $60 covered calls. Right now, it's giving me no reason to change my mind. I'm perfectly fine. It's right here. I've got January, so I bought some time, got paid $1,300 a contract. I'm just sitting here. I'd actually like to get long, but again, Mr. Market is not giving it to me. So where would I would be right here if I was long calls or long common shares, and this would be my stop here. That really is the site. Trough, peak, trough. It's probably going to come back down here to this 42, which by the way, that was the initial risk from the breakout that we noted. All right. Could have played that one a lot better, but hey, it's what it is. All right, let's look at a firm. It's done nothing wrong here. Oh my gosh. And I don't have anything on this. Jeez. This year I should have just bought every damn thing I said buy. So this would have been our first trend support we would have had here, right? Would have taken you out 50%, would have been stopped on the balance about $49 from this breakout at 44. So you would have had about a $5 trade on a firm. But looking at this wave, we are looking for, we've taken out the 50%. We've closed above the 61.8. We now are testing the 78.6. So it breaks above the 78.6 and holds. Closes above it. We're looking for the 150% fib at $82. So, if I was holding, I'd just come back down here and set my stop right here to this trend. That's where I would be. Wait and see what happens with this. Because unless for some reason you don't have a good position structurally, cash secured puts should be fine. Even $65 calls should be good. If you wanted to do something a little staggered with this look, you could come in and plan, because this, I think it continues here. I don't really want to add a position here until we get a pullback in the markets, but that's my 2 cents. All right, now block or whatever it's called. I'm going to come in and right now I'm going to tighten this up today. If you're still holding block, BLOK. Now this is an infrastructure AI play for me. So I want to try and hold it. So I'll be liquid with my trailing stop, like 25%, because I don't really want to get shaken out, because I think we do go up to all-time highs. Now structurally, let me just give you a measure of what these Fibonacci's look like. Fibonacci looks like off of this leg from here. This is how much upside. 50% back is $58. So 100% fib is $70.60 from where we are now. So this is just like a really good spot. We really did not reject price. We just tested, and we did not get this. So we didn't see the price rejection here like we see here. This is flagging, okay? That's a positive thing. We want to hold. All right, let's look at NT. Now, this was the prior trend channel that we had drawn, and we're going to come back in and just not really even do anything with that. Yeah, we're going to tighten it. Just looking at it, go to this wick here. The 523, tighten it up. No reason to give it anymore. Actually, let's move it down just a tad bit. Use the 6-2 wick off. So right here, it's very time consuming to go through all this stuff when you have a lot of different charts. Let me tell you. All right, let's go. What else did we want to do? We have a bunch of names there. Paycom, we got stopped out on. 4, still viable. It hasn't done nothing wrong. I'm going back, 5 weeks in swing trade notes at this point. the names that are still viable. I would tighten this one up though. I wouldn't go this deep. Starting to get this ran rollover kind of thing. So I'm moving it into this wick here. This 5-6 wick. Look at a beef. It's done nothing wrong either. Mark call off of this low here. I would tighten this one up though. 186 or 197 though. Structurally. It gives you a little room. Use the 516 wick there. Now, when I'm drawing these, I'm looking at it, how visual, the aesthetics of the symmetry, how it looks to me on the chart. I'm looking for equality. It's a guess. Any stop or even a target is a guess, but that ultimately is what I'm doing here. Let's look at Boeing. Just did nothing wrong. Man. And as I make calls, and I say, probably a good idea to take profits, right? Really, that suggestion, even though it was a good spot to take profits based on where we were and how well BA worked, okay? BA worked. Don't get me wrong, right? Don't get me wrong. We're at 192 from where? 160, $35. Who can complain about that? It's good leg. However, our continuation is still working. So I know there's some of you that are holding. So tightening up, I'm going to move up. You don't see me do this very often. I'm going to move up to my anchor, change my anchor low here. And I'm just going to give it a little room. I'm visualizing this is where we have a demand shelf that needs to hold. Right? So from a bullish scenario, I'm roughly looking at my second point at 206.60. Hold there. You're taking $6 risk as far as the upside. That's my 2 cents. IoT, we're already shaken out of this, but this is a reload candidate. Those of you who want to put some positions on, I'm still waiting for the Mag 7 to get green. And my trend support, my confirming trend support would be using this 610 low. That's my 2 cents. Now let's look at silver. Spent about an hour and a half today talking about this puppy with Sentinel. Okay, now I like PPLT better because it's profit, but at the same time, I also like the idea of being able to hold the metals. And, if God forbid Armageddon comes and we have a problem with the dollar, I would like to be able to take delivery of silver, because if the dollar doesn't work anymore, what the heck else are you going to have besides metals? And I like the idea of that, or at least a piece. I see no reason why a person shouldn't do that with, 3, 5, 8% of their portfolio. Have something that's deliverable in precious metals, but you're not storing it. But there's quite a decent premium there in SPP for a deliverable. And that's the difference. SPP is deliverable. PPLT is not. And, to be very candid, now that we're pulling back a little bit, we get to the base of this shelf. I'm probably going to start buying shares around 110, and I'm going to sell covered calls. That's what I think I want. But from a structural standpoint, where would my stop be? There's really no demand shelf here. Our demand shelf's down here, which is why I'm moving it down here. So your second marker is roughly 107. What it comes in at, 107.28. That's where I would put my trend support, trigger a stop if I owned PPLT. But I clearly want to get a position on. We are confirming, right? So this entire leg here is the mound. This entire thing via visual. I'm measuring drive 1, drive 2. So I'm expecting drive 3 about here around 126. So I'm thinking selling, buy the common shares, selling 125 cash secured puts. But I also like the idea of getting paid, because one of those contracts was like $1,400 for like the 115 or 120s. I like the idea of getting paid now, because then all I have to do is manage the trade. I've gotten paid, not a banger like, HIMS or Oust or Qubits or QUBT, but still, you have to have the moderate side. This is still, I think there's some huge upside. I think metals continue to get a bid, and I'm going to end with that. Great trading, folks. Until next time, hopefully this was helpful. Of course, please like and share my videos. We need to really increase the traffic a little bit because Kirk's panicking. Not really. It's just he wants it to grow, and this is a very challenging market to get things to grow. But again, like and share my work if I help you or benefit you. And by all means, follow me on Twitter, Swing Trade Notes, plural, at Swing Trade Note. I post a lot of different things there. And I post it there just so our chat isn't cumbersome. So there's going to be more news-based stuff, but I'll still continue to do the reports and everything else in fundamental trends. And once in a while, some of the stuff I post on Twitter, I'll post in the room. But I pretty much want to stick to charts and the analysis and those write-ups for you. All right, folks, have a great evening. Until next time.